Have you ever wondered how credit cards came into existence? It's a fascinating journey that dates back to the early 20th century. Let's transport ourselves to the Roaring Twenties, a decade marked by economic prosperity and cultural dynamism. Amidst this vibrant backdrop, the concept of credit started to take shape. It was during this period that oil companies and department stores began issuing proprietary cards to their customers. But these weren't the shiny plastic rectangles we're familiar with today. They were made of either metal or cardboard and were primarily issued to create customer loyalty rather than to extend credit. These cards could only be used at the issuing company's locations. For instance, if you were a loyal customer of a certain department store, you would be issued a card that allowed you to purchase items from that store on credit. This meant you could buy now and pay later, a concept that was revolutionary at the time. Oil companies followed suit. They issued similar cards that allowed motorists to fill up their tanks at the company's gas stations and pay at a later date. This was an era before nationwide networks of gas stations, and these cards allowed companies to build a loyal customer base. These proprietary cards were the rudimentary forerunners of the credit cards we use today. They introduced the concept of extending credit to consumers, a principle that is at the heart of modern consumer finance. However, these cards were limited in their use, accepted only at specific locations, and often only within a certain geographical area. The concept was groundbreaking, offering a new level of convenience to shoppers and travelers alike. But it was just the beginning. The 1920s may have planted the seeds of the credit card, but it would take a few more decades for these seeds to germinate and grow into the credit system we recognize today. So the seeds of credit cards were sown in the 1920s, but it took a few more decades for the concept to evolve. The first recognizable ancestor of the modern credit card came into existence in 1950. This was no ordinary card, but one that would change the financial landscape forever. It was called the Diners Club card. The story of the Diners Club card is quite fascinating, and it all began with a man named Frank McNamara. One day, McNamara found himself in an embarrassing situation at a New York restaurant. He realized he had forgotten his wallet and had no way to pay for his meal. This incident sparked an idea in McNamara's mind. What if there was a way to make purchases without carrying cash or a checkbook? This idea gave birth to the Diners Club card. The Diners Club card was not a credit card in the sense we know today. Instead, it was a multi-purpose charge card. The card allowed members to make purchases at a variety of establishments, with the understanding that they would pay the full balance at the end of each month. The card wasn't plastic like today's cards either. It was a cardboard card with a list of the 27 participating New York City restaurants. The concept caught on quickly. People loved the convenience of not needing to carry cash or checks, and within a year, the Diners Club card had 20,000 members. Soon, the card expanded beyond restaurants and was accepted at hotels, airlines, and other businesses. It was the first card of its kind to gain widespread acceptance, and it set the stage for the credit cards we know today. But the Diners Club card did more than just provide a convenient payment method. It marked the beginning of a shift in how people managed their finances. It introduced the concept of buy now, pay later, and showed that there was an appetite for this kind of financial flexibility. The Diners Club card marked the beginning of a revolution in the way people managed their finances. It was a game changer, a true pioneer in the world of credit. And while the credit card industry has evolved significantly since then, the Diners Club card will forever be remembered as the innovation that started it all. The success of the Diners Club card did not go unnoticed. Soon, major financial institutions entered the scene. This new era of plastic money was just beginning to take shape, and with the allure of potential profits, the big guns couldn't resist joining the fray. One of the first to step into the ring was none other than American Express. Already a household name in the financial world, American Express introduced its own credit card in 1958. This was not just another card, it was a charge card, which meant the balance had to be paid off in full at the end of each month. This innovation offered a new level of financial control for consumers and set American Express apart from its competitors. The following year, in 1959, the Bank of America launched its Bank Americard in Fresno, California. This was a true credit card, allowing cardholders to carry a balance from one month to the next. The Bank Americard would eventually evolve into what we know today as Visa, one of the largest credit card companies in the world. These two cards, American Express and Bank Americard, played pivotal roles in shaping the credit card industry. They introduced the world to the concept of buy now, pay later, a paradigm shift in consumer behavior. They provided an alternative to cash and checks, offering a new level of convenience and flexibility in transactions. These cards also led to the establishment of credit histories, a key factor in financial decision-making today. But perhaps most importantly, the arrival of these major players legitimized the credit card. No longer was it a novelty or a luxury, it was becoming a necessity. Businesses began accepting credit cards as a standard form of payment, and consumers started seeing them as an essential part of their wallets. And so, the stage was set. The dawn of the credit card era had truly begun, and the world of finance would never be the same again. With these major players entering the market, credit cards started becoming a household name. The 1960s and 70s were crucial years for credit cards. Technology and regulations started playing pivotal roles. Enter the magnetic stripe, an innovation by IBM in the 1960s that forever changed the way we use credit cards. Prior to this, credit card transactions were a cumbersome process involving manual imprints and phone calls for authorizations. The magnetic stripe, a simple strip of magnetic material on the back of the card, was a game changer. It allowed for data such as the cardholder's account number and name to be encoded directly onto the card. This not only sped up transactions, but also increased security, as the data could be encrypted and was harder to counterfeit. But as the popularity of credit cards soared, so did the need for regulation. Consumers needed protection from potential abuses, and the Fair Credit Billing Act of 1974 stepped in to provide just that. This act was a significant milestone in credit card history, offering a host of protections for consumers. It addressed issues like billing errors, unauthorized charges, and unfair billing practices. A key provision was the right to dispute charges. This gave cardholders the power to challenge incorrect billings and fraudulent transactions, a right we now take for granted. The act also imposed requirements on credit card companies. They were now obligated to promptly correct billing mistakes, to refund overpayments, and to provide clear billing statements. This made credit cards more user-friendly and boosted consumer confidence. These technological and regulatory changes were transformative. The magnetic stripe made transactions faster and more secure, while the Fair Credit Billing Act protected consumers and instilled trust in the system. Together, they fueled the rapid expansion of credit card usage. These developments paved the way for the credit cards we know today. From the 1980s, credit cards started becoming more sophisticated, featuring fraud protection measures and reward programs. The evolution of credit cards took a significant turn during this era, with the introduction of credit scoring systems. These systems used complex algorithms to assess an individual's creditworthiness, influencing lenders' decisions about who could receive a credit card and what their borrowing limit would be. Simultaneously, the world was moving towards digitalization, and credit card companies were no exception. Online account management became a reality, making it easier for consumers to keep track of their spending, pay their bills, and even dispute fraudulent charges. The convenience of managing credit card accounts from the comfort of one's home was an enormous leap forward in customer service and accessibility. But what truly revolutionized the world of credit cards was the introduction of reward programs. These programs offered points, cashback, or travel miles for every dollar spent, making credit card usage a more enticing prospect for consumers. Some cards offered more rewards for certain categories of spending, like groceries or gas, while others provided a flat rate for all purchases. The concept of getting something in return for spending money was a game changer. It meant that consumers could actually gain value from their credit card use, beyond the convenience of deferred payment. This value proposition has become so powerful that today, many consumers choose their credit cards based on the rewards they offer. Over time, these features have made credit cards more appealing to a wider range of consumers. Credit scoring has made card ownership more inclusive. Online account management has simplified the user experience, and reward programs have incentivized spending. Today, credit cards are an integral part of our financial lives, offering convenience, security, and rewards. Whether it's earning points for a dream vacation, getting cash back on everyday purchases, or simply enjoying the ease of online shopping, the modern credit card has truly transformed the way we manage and spend our money. So, what's next for credit cards? As we look to the horizon, two thrilling developments are poised to revolutionize the credit card industry: biometric credit cards and blockchain technology. Imagine walking into a store, picking up a few items, and simply walking out, with the transaction automatically processed and secured by your unique biometric data. That's the promise of biometric credit cards. On the other hand, we have blockchain technology. Known as the backbone of cryptocurrencies like Bitcoin, blockchain holds the potential to bring unprecedented security and transparency to credit card transactions. By creating a decentralized, immutable record of transactions, it could reduce fraud and reassure consumers. These technologies are not just science fiction. They're on the cusp of becoming reality and could redefine our relationship with money, making transactions more seamless, secure, and empowering than ever before. While we can't predict the future with certainty, it's clear that credit cards will continue to evolve, shaping and being shaped by our financial habits.